Good morning, ladies and gentlemen. We're going to start. Thank you for attending our roundtable, Europe, a new roadmap. As you know, last year when we met for the last time, we all remember that the European Union bashing, and more specifically the Eurozone bashing, seemed to be the only game in town. The United Kingdom had just decided to leave the Union. The European leaders were all the more worried about the future that general elections were looming in some key countries, with a serious populist tide threatening to derail the whole process. Today, the mood has widely improved. First of all, the 27 remaining states managed to stay united to cope with the Brexit issue. Second, Dutch and French citizens had put the populist threat to a stop as in a move that German citizens should amplify next fall. Third, Greece's partners have found a way to go ahead in rescuing the country. And at long last, but not least, Italy has undertaken to fix its banking system. So, as Europe seems to have turned the corner, maybe this could be the right time to ask what the roadmap, the new roadmap, should be. To answer the question, ladies and gentlemen, let me introduce to you our distinguished panelists from left to right. Next to me is Mr. Séverin CABANNES, Deputy Chief Executive Officer of Société Générale. Next is Stéphane BOUJNAH, Chairman and CEO of EURONEXT Group. Unfortunately, Fabrizio PAGANI couldn't be with us. Please, will you excuse him? Next to him is Mr. Ugo BASSI, Director at the Directorate General for Financial Stability, Financial Services and Capital Markets Union within the European Commission. And next to him is Jean Lemierre. Jean Lemierre is Chairman of BNP Paribas. And next to him, Yves Perrier, CEO of Amundi. Let's start with the policymaker. Ugo BASSI, a year ago, just after Britain's opted for Brexit, many people were worried about the future of the CMU, launched 2 years ago. And the 8th of June, the Commission presented a midterm review of the CMU and a roadmap for the next 2 years. So what are the main steps the Commission is taking to drive the CMU forward?
Thank you very much. Thank you very much. Good morning, ladies and gentlemen. Thank you for inviting us to be present here in this impressive event and present the point of view of the Commission from the angle of the financial services legal framework in Europe. Indeed, we are trying really to push our agenda as much as we can, and we are trying to move our agenda from a reaction to the crisis, which was the dominant principle under the Barnier era, I would say. You know, you all know the Barnier agenda with more than 40 new initiatives adopted since 2009 and until the last months of his mandate. So this was the reaction that the Commission had to the financial crisis, and which helped us to rebuild confidence in our financial services legal framework. Now we are moving slowly towards a more positive agenda, as you said, and we are trying really to push initiatives which are aimed at boosting growth, jobs, and you know, moving towards a relaunch of the economy as a whole. On the one end, we are trying to make sure that the legal framework, as it was reshaped quickly during the crisis, is actually working and functioning properly. Hence, work streams like, for example, the call for evidence, where we asked people and stakeholders to tell us whether there were inconsistencies, gaps, overlaps, and things to be adjusted. Hence, our effort to try to implement this agenda concretely in the member states, but, as I said, also a more prospective agenda, which is basically represented by the completion of banking union that we would like to carry out in the coming months, and capital markets union, the capital markets union project which we have mentioned, which I have the honor to lead. And capital markets union, it's all about creating, identifying, shaping new sources of financing for the businesses, more suited, better tailor-made to needs and the specific business models of the different businesses, from micro enterprises to the big corporates, and also about offering investors new sources of investment, new products, and new avenues for profitable investment. So it should be a win-win situation. It's not going to happen overnight. It's a project which requires months to be and years to be implemented, which requires the contribution of all the involved actors, so not only the policymakers, certainly the Commission, but also the European Parliament and the Council, but also the member states, also the stakeholders. It's a project which requires really a joint effort, because I think that we all share the same objective, and we all have to put our effort in this project in order to make sure that it works. It's a toolbox. It's a project which comprises a number of different initiatives at the EU level, at national level, at the level of the markets. It's a project which is very ambitious, and which started in 2015 with the publication of the first action plan. With this action plan contained 33 initiatives. The Commission has realized and implemented 21 of those. Some of them are now in front of the legislator for discussion. Some of them have been completed and are about to produce the first concrete results. Now, as you rightly said, we are in the phase in the second phase of the project. And recently we have published this midterm review, which announces a number of further initiatives and which raises the level of ambition of the project, because we thought that it was necessary to do even more than we had envisaged.
So can you tell us the few initiatives, the main initiatives that are to be expected in the second phase?
I think that, well, there are more, again, around 30 initiatives, so that I cannot mention them all. I would probably focus on 3-4 of the main ones. Certainly, we are focusing very much on strengthened European supervision. I think that a fundamental element of the functioning integrated capital markets union is an harmonized and even centralized supervision at European level, where and when this is needed. So we are now about to identify some targeted areas where we would like to propose that the European supervisor, ESMA, will be entrusted with direct powers, centralized powers, in order to make sure that the supervision happens with the same, on the basis of the same criteria, and that there are no differences in the member states.
So a real European level playing field, is that so?
This is probably the ultimate objective. It's not something that you can build from one day to another, but certainly we will start by identifying some targeted areas where the European supervisor should have direct, centralized supervision. Second area that I could mention, just to refer to it, is, for example, the big work stream on sustainable finance. I mean, I don't have to talk about it because there has been a very detailed panel about it, and Mr. Thiemann has said all about the European perspective, so we are waiting for the report, which will certainly give us policy recommendations on how to pursue this extremely important agenda from the perspective of the Commission. We are also working very much on fintech. This is another area where we are looking very carefully at market developments in order to make sure, on the one hand, that fintech is promoted, but on the other hand, that it does not entail risks for the investors and risks for the consumers, which could be underestimated at the beginning. Another very important area, and I think that this is very important for the structure of the 27 economies, is, let's say, the agenda which aims at making it easier for SMEs to go public and to go for public listing. We are lagging behind on this, and this is a real pity and a real missed opportunity.
There is a big problem in Europe with listed SMEs.
Absolutely.
It's shrinking for the time being.
And this is exactly something that we would like to address by looking closely at all the rules to which SMEs are subject, which sometimes, and this is linked to the exercise on the call for evidence, which I've mentioned before, sometimes those rules can be disproportionate in terms of size and business model that they are regulating. So the idea is to look at all the relevant legislation like MiFID, MiFIR, MAR, so market abuse, etc., and to reduce the administrative burden which can be the result of the application of those rules for SMEs, precisely with a view to making it easier for them to go public and to list. This is, I think, a very, very important aspect of our work. I will stop by saying something which refers to your first comment. It's about the link with the upcoming Brexit with respect to the specific file. I think that the approach of the whole project has slightly changed with a view, I mean, in light of the upcoming UK leaving the Union, because we have to consider that regrettably we won't be able to rely, we will no longer be able to rely on the liquidity, on the big liquidity which is currently in London. So this means, and it makes it even more important for the 27 to develop their own capital markets and to develop them in an integrated way, in an integrated manner, because precisely we will have to make sure that in the future we have an autonomous, independent capital market system in order to face this legitimate and regrettable decision of the UK people.
Can you just tell us a word about a big issue that that found something like a solution? Maybe I'm talking about securitization. There has been an agreement recently on this topic with the European Parliament. Do you think it would be proper to relaunch a real securitization market in Europe?
We do believe that capital markets cannot develop without a strong banking sector next to them. So we see the Capital Markets Union project as a complement to strengthening the banking sector. Hence, securitization is one of the pillars of this, let's say, strong banking sector. We think we have to welcome very much the agreement that has been reached very recently, and we think that relaunching the securitization market, as long as it is framed within the concept of secure, transparent, and therefore with no
simple,
or very simple, secure and transparent, so with no or very little risks linked to the use of it, we believe that it will basically allow for another type and number of investments which were blocked probably unduly up until now. A number of other actions, of course, will have the power to unlock investments. For example, the prospectus regulation, which has been adopted recently, which basically lowers the thresholds above which a European prospectus is required. So as you see, all these actions are all of a different nature. Some concern the banks, some concern capital markets directly, but all together should aim at pursuing and achieving the objectives that I've mentioned at the beginning.
So we'll see in a moment if this agreement on securitization is properly shaped to convince our participants to make it work. Let's hear what the business thinks about all this. Stéphane BOUJNAH, how European financial centers will benefit from, in Europe, from the CMU, and for what do you expect from the European new roadmap in a post-Brexit perspective?
Well, the first big picture item is that we have to, I mean, that may sound as a very soft comment, but absolutely convinced that the world of yesterday is over. I don't believe that we have to be inhibited by all those concepts about liquidity being trapped in London. The definition of liquidity is that it is liquid, and liquidity does move where opportunities are for investment purpose. So I think we are on the verge of a fundamental transformation of financial center, where we move from a single center for financing, for transforming the saving of 450 million people on the continent into debt and into equity, towards a situation when there will be distributed financial centers, which is not exactly the same as fragmented financial centers. So we have to be absolutely self-confident about our capability collectively on the continent.
What do you mean exactly by distributed financial centers?
It's the same as fragmented, but it's the positive side. In the world of blockchain, where distributive ledger is good and central system is bad, distributed is good and fragmented is bad. No, seriously, I think we have to be, I mean, again, I'm sorry for repeating what I said. That's the very first, the fundamental point. What I said last year, but the world where the euro is the currency of the of the European Union, of 19 countries of the European Union, and basically the continent, and 40 to 70% of the trading of euro-denominated assets is in London. The world where most of the large successful European financial institutions, large insurance companies, large asset managers, large financial global banks are on the continent, but most of the financing operations for funding so on are in London. The world where the largest global industrial and commercial companies in Europe are in the continent, but most of the bankers are in London. This world was fine in a world where the finance is in Wall Street, the technology in Palo Alto, the movie industry in Hollywood, and the oil and gas in Houston. But in a moment where London decides, for all sorts of legitimate reasons, to move away from the implicit federal dynamic of the continent and decides to break with the convergence of regulation, then this becomes an anomaly. And there is no reason why this part of the world, continental Europe, in particular the Eurozone, should not develop its own financial centers to transform saving into debt and equity. Now, what I want to underline on as far as the CMU is concerned, is the fact that it's complicated, and probably at some sort of time we need to make some form of blasphématoire choices, like deciding that what we cannot do within the EU 27, we have to try and make them happen within the Eurozone 19. There is a level of solidarity, integration, de facto operational level of single supervision that makes plenty of sense to make the very important things we have to deliver within the CMU. One point which is not enough commented, which is part of your agenda in the CMU, which I want to stress, is convergence of insolvency rules. Insolvency rules are just critical for all the business we do across capital markets. It's difficult because in many countries this is handled even by the Ministry of Justice. It's not even part of it's not under the responsibility of the people who are in charge of the usual coordination within Europe, but it's absolutely fundamental. The good news is that when you go into the details, you realize that within the Eurozone, the barycenter of concepts for insolvency are a combination of Roman law and Napoleonic civil code. In reality, we are much closer than we think. It seems as a very far-fetched, complicated horizon, but in reality, fundamental convergence of insolvency rules can make a big difference in every single component of the famous financing elevator.
So let's say a word about the clearing issue after the Brexit. The European Commission, as well as the ECB, insists that clearing and settlement activities in euro should be performed within the Eurozone. Can you explain exactly what is at stake here? Why it's so important for the European markets?
I think the European leaders and the regulators have made the point extremely clear. I mean, they had clear points on the importance of repo clearing and on systemic aspects related to the euro-denominated assets clearing in Europe. What the paper the European Commission issued is complicated. It can be read in many ways, but one reading, which I think is the mainstream reading, is very simple, and it tells to the UK side, basically, this is your choice. You decide. Either you believe that Brexit does not mean Brexit for clearing, and you accept that for clearing purpose, Brexit will stop, and you will accept the jurisdiction of the European Court of Justice, the regulation of the ECB, etc., and you will be regulation takers, and that's fine. And then the world can continue as it used to be. Or you believe that Brexit means Brexit even for clearing, and that you want to take back control, and that therefore you are going to walk away from the regulatory environment of the previous world, and then clearing of euro-denominated cannot stay anymore outside the European Union in the new environment. I think, and you take the decision. This is one reading of the paper of the Commission, and I believe that this is the mainstream interpretation. If it is the right interpretation, then I think it's very clear and tells on this specific little issue, like on many other issues, by the way, of Brexit, to the British side, you figure out how you want to solve your internal contradictions. You make your decisions. This is the deal we offer you. And it is, in my view, the first signal of a sort of unilateral proposal that the European Union should present to our British friends to tell them, okay, we know it's difficult for you to move forward. We don't know what's going to be the outcome of the negotiations, but this is the deal we offer you to be in force as soon as you have made up your mind.
Hugo Bassi recalled us just a moment ago that one of the main goals of the CMU was to attract the SMEs to get listed. But for the time being, the listed SMEs are declining. Their number is shrinking. So do you think the European Union has done all what it can to attract the SMEs to get listed?
For me? Yes. Yeah. Well, if you want something, make it happen. The situation that you have described is disappointing. I think it's the outcome of many technical drivers and factors, the main one being the very fierce competition against capital market of the private equity world. In a world where debt is so cheap, this is bonanza for private equity, and when you can sell your company with a premium to a private equity guy, why should you accept to IPO it for a discount unless you are absolutely confident that the growth is here? So the first thing is we have this existing situation where the smaller the market, the less liquidity is, the less intense the research, the more attractive the private equity alternative. I don't think it will last forever because I'm not sure that the current cheap debt level is going to last forever, even if rates are, we should not expect a significant rise in rates. What is important is that we have a unique opportunity in the technology sector in Europe. There have been rivers of money that have been pumped into technology from business angels, VCs, governments. I mean, the amount of public state taxpayers' money pumped into technology across Europe has been immense. About 20 to 30% of those companies will burn the cash and die because they've been too late or whatever, the usual technology sector ratio, 1, 2, 3% maximum will get to a global competition level and will consider at some point of time maybe listing on NASDAQ. And there are 60 to 70% of those companies that are strong enough to survive, but not strong enough to go global immediately and need to bridge the gap to the growth. Those companies have to consider going to capital markets, and they are just in the process of being mature enough. They have a liquidity gap. They need to go back to the pump, the funding gap, sorry, and they have a liquidity gap, which is that their shareholders need, their initial investors need exit. So I'm absolutely confident that all the money that has been pumped into the technology sector across Europe is going to translate into a new wave of tech SMEs listing.
Fine, thank you. Yves Perrier, do you think that Europe is heading in the right direction to spur long-term investment?
When we look at the Eurozone as a whole, about the fundamentals, we can say that Eurozone as a whole is going well, very well. This year the growth will be near 2%. The surplus of trade is 3% of the GDP, 300 billion euros. And even the unemployment rate is now globally under 10%, is declining, and the global debt is stabilizing. So on the one hand, a global situation which is quite favorable. Then when the question is, when we look at the different situation in different countries, we see that the divergences have been increasing. And if we take 2000, the year of financial crisis, as a reference, we see that the debt of Germany is quite equivalent. The debt of France and Italy increased by 30 basis points to nearly 100%, and for France and 132% for Italy. We see also that the unemployment rate for young people is very high in France, 20% and more in Italy. So what we see, it's a global Eurozone which is going well, but divergences between the different countries which are increasing. So the main question is how to reduce the divergences. So there is a question of structural reform, law reform, labor reform, and so on. But for me, there are two key questions. The first is how to reallocate the excess of savings of Germany and Netherlands, to be simple, the country of the north, to the south, not through additional debt, but for me, through private equity. If the growth is not at the good level in Italy or in some part of France or Spain, it's a lack of industrialization, a lack of investment. At the same time, for the German investors, money, the yield is very low. So we have to make the condition in order that this excess of savings in Germany and some other countries are reinvested through different vehicles, we can discuss about this, on the country of the south. So that's the first point. The second point is relating at the way the global savings are invested in Europe. Firstly, the amount of savings in Europe is very high, about 15% of the GDP. It's in the US nearly 0%. Have in mind this, and in UK it's a bit more. So we have growth and we have the money. But when you look at the allocation, equity in Europe represents 6% about of the total savings, and in France it's not fundamentally different. The main investment are real estate and risk-free rate, while in the US it's above 30%. So we have a second major stake, which is to change the allocation of savings towards equity or other source, which is long-term investment. So if we are able to combine this reallocation from a country to another and this reallocation to risk and long-term investment, I think that we should be in situation to increase the growth of Europe very significantly, and more importantly, reduce the divergences.
So we definitely have to have savings more equity-oriented, Mr. BASSI. Do you think Europe is doing as much as it can to orient savings towards equity?
Yeah, but that's exactly the purpose of the Capital Markets Union project, precisely to encourage to go towards equity and to reduce dependence on bank lending. And that's the idea. We're trying to do our best.
Yves Perrier, Amundi has taken control and finalized the integration of a major Italian asset manager. Does it mean that, in your view, Europe of savings is in a good way of achievement, or what remains to do to enhance the cross-border activity in the asset management business?
No, we are firstly probably at the beginning of a consolidation, not only on the asset management sector, but the financial service sector as a whole, and which is the consequence of this context of low interest rate. Relating asset management, I would say that naturally speaking, we operate in different financial market and so on. So we are, by a certain way, integrated. The progress to be made is on the question of funds. We should harmonize the situation in order that a fund in any countries of the Eurozone should be could be sold in all the other countries, which is not presently the case. And it would simplify the way of working.
Yes, Mr. BASSI.
Just one word on this. I mean, it's one of the several work streams of the Capital Markets Union project is precisely on distribution of funds everywhere in Europe. We try and really to identify, we have identified and we try to reduce or to eliminate all the concrete barriers which exist at national level in order precisely for this cross-border distribution to be efficient. Thank you.
Let's come to the banker now. Bankers, Séverin Cabannes. Is the CMU's ambition a good answer to the challenges the European banking industry is facing?
Thank you very much, Philippe. And the first thing I want to say is that, and you said that at the beginning, we really believe that Europe is a very specific window of opportunity. And after the result of election in France, in Netherlands, and really the high political risk that we can perceive in Europe, and specifically in France, has disappeared. And clearly today, all the energy is coming from the European Commission, but all the private players and the government are ready to align to boost, in our view, European integration. And the question we had this morning was, what could be the roadmap for this new Europe integration? And I would like to say that, in our view, as a practitioner, as a bankers, which are in the field, we see clearly four main issues, four main risks, and we have to address collectively in the next period of time. The first one is, and Yves mentioned that, is a long-term financing availability for Europe. And the CMU, the Capital Markets Union, is, of course, linked to that. And as you know, the banking regulation and the insurance regulation has created a very significant reduction in our capability, really to have long-term financing and to offer to our clients, to our investors, long-term financing as a banker. So there is a real risk, in my view, there, and there are a lot of things to do, and Yves mentioned some of those. We can think more about that, how the European framework can really favor. And I will give you one example. The first example is not concerning banking industry, but more insurance industry. And really Solvency II today is really limiting the capability of the big part of as investors of the investor community to really invest in a risky and long-term assets. So for us, there is a specific point to be addressed on that issue. The second point, of course, we can use the prudential tools for the banks to really allow the banking industry to have a longer-term capability. And we have just before this panel this green financing question, and we are very welcoming the initiative from the European Commission regarding the prudential approach to favor the financing of the energetic transition, clearly. So I will not spend a lot of time, but there is effectively something to do, and in my view, specifically in this long-term financing availability for European economy. The second risk, as a banker, and you will not be surprised probably that I mentioned that, if you have a look on the European banking industry, and Mr. BASSI made a very big comment that Europe needs also a strong banking industry, even for capital market development, but more than that. And today, in our view, there is a real risk of a new unlevel playing field in terms of banking regulation. Probably you noticed very recently on the 12th of June that the US Department of Treasury just disclosed a new report regarding this regulation philosophy, if I must say, in the US environment. I will not comment specifically on that, but the point, it's very clear that the general philosophy now in the US is stop inflation in the regulation, not reduce the regulation. I don't think that there will be a reduction, but stop the inflation, the first point. But a more specific point, which is concerning us very much, is the Basel IV and the Basel III negotiation and discussion today are being reconsidered by the US Treasury Department. With, I will give you a technical point, but there is a reconsideration on the long-term liquidity ratio from the US perspective and a reconsideration of the new capital treatment of the trading activities and the market activities, which is a huge difference because if the US is not implementing that, Europe is still considering to implement that. There will be a real gap in terms of unlevel playing field between the two industries. And we have to understand that the banking market is not closed market. It's already an open market, and we are competing with everybody in the world. So clearly, in terms of regulatory framework, Europe has to consider what would be its interest on the long run. The third risk I like to mention clearly today, either way, our central bank will exit from this existing quantitative easing policy. It's a very, very important point, and you know how it really creates some asset price bubbles, and today we have as a bank to manage this new type of risk, and there is in the environment clearly some asset prices which are not clearly priced, and this creates a risk for the system. And secondly, but I will not comment too much on that, there is the curve and the negative part of the interest rate, the yield curve in Europe, is creating a major change in our client behavior. And the asset and liability management models in the banking industry are really at stake today due to this yield curve negative part and very, very non-steep part. This is a question mark which has to be raised very quickly, but how long it will last, because if this is for long, which is a scenario we have, it will change really severely the asset and liability models in the banking industry. Just to give you an example, in France, today, this very low interest rate curve in France has generated a huge, what we call renegotiation power of the individual clients in the mortgage industry. And all that, the French market has become not a fixed rate mortgage market or a real estate loan market. It has become a variable rate, but only downside. This creates a huge risk for the system. We cannot ignore that risk. And so we have to think together how we will exit progressively from this situation. And let me comment on the fourth risk, and I really think that European roadmap has to take that risk, and which is also an opportunity, if I may say, which is a digitalization of our business models, of our relationships, and of the environment. Of course, it creates huge opportunities for all our clients, and we have to take those opportunities. So it's also an opportunity for the banking industry. But today, we have to consider probably to create a real capability to innovate in the banking sector. And we have answered to the European Commission requirement recently. And we think that we have to think, for example, to really boost the innovation capability of the banking industry in Europe, to create something like a framework for experimentation. Today, when you do want to make an experiment with a fintech or with something, you have to respect completely the regulatory framework. So it creates a very long time to market. In the US, we have seen that there is what we call an experimentation sandbox tool to make very quick and very fast test and learn experience with the banks, with non-banks, and so on. Really, we lack that in Europe today. So I really think that in this digital thing, we have to do more at the European level. Second point in digitalization, which is in our view also a key point, is regarding the cloud computing. You know, today, the cloud is creating a huge, potentially a huge breakthrough in terms of unit cost, in terms of IT security, in terms of IT innovation capability. And today in Europe, there is an initiative at the European level regarding the cloud initiative. But when you want to have a bank really to develop this type of initiative, the way to do that is very, very constrained, and the time to market is very long. So we have probably also to consider how Europe, and in the banking industry specifically, will address this huge transformation regarding cloud. So to finish, of course, CMU is one of the part of the roadmap, but in our view, we have also to address those different type of risk if we want to really create a long-term path to sustainable growth and to have a banking industry serving this path.
Séverin CABANNES, as I told in the beginning, Italy is at long last trying to fix its banking problem. Do you think that at the same time Europe is really fixing its banking problem? Is it a complete banking union achievable soon?
The biggest question is writing the deposit insurance scheme from it today. So we have made a very significant move forward with a single supervisor, with a single resolution board, which is installed but not completely designed. And now we have to address this point. So I would say this is really coming to a very highly political sensitivity. So I don't know if we could do fast in that direction, but certainly we have to go in that direction to implement this European deposit insurance system. Clearly for us, it's a key point to achieve that. But if I may say one word on your point, regarding the global European banking industry. Today, I consider that the global systemic risk, which has been addressed through new regulation in the banking industry, is really coming to be addressed. And you had some asset quality issues we are not clearly addressed in some countries in Europe. I don't think there is an asset quality issue in France, but there were somewhere else. So today, we have clearly to address another point, which is not this type of risk or systemic risk. A new risk, in my view, in the long-term risk for industry is the return on equity, the profitability of the industry. And if you compare in average what is the return on equity of the Eurozone banking industry, it's less than 7%, between 6 and 7% today. If you look at the cost of equity of our industry, it's still above 9%. So there is a gap between our cost of equity and the return on equity globally. I don't speak about Société Générale specifically, but globally. This is probably the major issue that Europe has to address. We cannot imagine a system with such a gap for a very long term.
Thank you, Séverin. Jean Lemierre, does the CMU project meet your expectations? And is it a good framework to give Europe a robust and efficient financing system?
Look, a lot has been said already, so I'll be brief. Do we need capital market union? The answer is obviously yes. Yes, in this room. In some parts of Europe, people will not say yes. Some people are reluctant. Let's be aware of this. But the answer in Paris, rightly so, is yes. Do we move fast enough? No. I welcome what was said. This is good. But we are far, far, far from what is needed. And when you want to create a capital market union, what you need to think about first is money. Where's the money coming from? And I'll go back to the point which has been already made. It's very striking in Europe the way we allocate long-term resources. We don't have pension funds in most of the countries, but we have life insurance. And if you look backward over the 10 or 15 last years, you will see that the portion of money allocated to the corporate sector and to risk has been reduced. I would have welcomed, Mr. BASSI, you say this, and you put forward some thinking about what should be done to change this. That's absolutely key. Securitization, of course we need. Let's move forward faster. It's urgent. So we do support, I do support. I've always been in favor of this. Solvency rules, yes. Please, let's open the debate. And last point, let us maybe have a clear view about what we want. Do we want a European market, or do we want a euro-denominated market? I say this because I do believe that there is a way to move forward more quickly. And when we have a single currency, when we have banking union, when we have cross-border funding, we should also move on euro-denominated market faster. I know it's difficult for you. I do not ask you to answer the point. I understand, but I make it.
Yet there is still a big issue about liquidity in Europe. There are still borders.
No, but that you reach a totally different question, which is banking union. Banking union is by far one of the greatest initiatives taken by Europe.
But unfortunately, still incomplete.
It is in the making. Let's be positive. Let's look at the glass half full. It is in the making. The SSM is a great initiative. It does take time to put in place such an institution, and they have done the job quickly. We are under their supervision, we know, okay? And they do a lot, and they are good, and they are credible. And they have got the credibility of their skills and the credibility of the ECB. All of this is extremely important for each of us. So that's good, that's positive. We see progress in dealing with the legacy of the past, which is a difficult question. Europe is being haunted by this, and we have to fix. It's the debate about the NPLs. So I shall not be long on this, but we have seen in the last weeks two initiatives, one in Italy, one in Spain first, and one in Italy about two banks. We may have a long debate about, is it done according to the books, should it be done in a different way? Yes, we need to have this, but we should not be shy about the fact that it's done. You know, step by step, banking union is trying to fix the questions we have. So that's key. This is really an achievement. Now, I agree with you, there's still a lot to do, and I would like to mention notably one point, which is liquidity. The danger of banking union is fragmentation. And fragmentation doesn't help to unlock the potential of Europe. And this is not the reason why all of us we are making a lot of efforts. And on liquidity, there's still a debate. The ECB knows this, the EU Commission knows this well. It's quite urgent that liquidity, maybe more precise, the liquidity banks collect can be used across the Eurozone in a free way. Why? Because banks have always had a key duty over time is to allocate resources across the borders and over time, over the years. And that's what we need to do in Europe, especially across the borders. We know why at the beginning some regulators were careful about this. I hope that step by step they are being reassured by the SSM, by the quality of the supervision, by the commitments taken by the banks, and that we shall make progress there. That was your question on liquidity.
Jean Lemierre, Séverin CABANNES told us about a US Treasury note published on the 12th of June. And I know that you noticed the note as well. I'd like to hear your comment on that and what it means for the new European roadmap.
Well, it's the paper published a month ago is, as far as we understand, the first one of a group of memos which are to be published by the US Treasury on various financial questions. They understand that the second one should be about asset management and so on. So these are very important papers. They are very well, if I may say so, very well drafted. they are very interesting, and they are very open and candid. And they speak in a straightforward way about the view of the US Treasury about banks, banking regulation. And I agree with what was said. They speak a lot about how to improve the funding of the American economy, which of course is their duty. The important part probably for us is that we need to look carefully at the views made across the Atlantic. The debate which is behind this, and I know that the wording level playing field is used probably too much, but this is a serious question. We are in a global world with global corporate, and they need global services. And there is a degree of competition. And I do welcome that new regulations making the world safer. But if the world is to be made safer, it should be made safer in a balanced way across the Atlantic. And competition should be looked at very carefully. And that's why we see a debate about questions like trading books and the FRTB or NFSR, which are extremely important questions, extremely technical. The US do not oppose. They simply say, we are going to review, we are going to look at what it means, the way we want to implement this over time, and maybe the amendment we have to this. I think in this type of circumstances, it's fair that in Europe we take the same view. We say, okay, let us take the same approach, let us review the same way, let's have the same understanding about the way competition is being built in a fair and safe way. And I do insist on the security side, it must be safe, but let's move in a coherent way just to promote fair competition and high quality services to the corporate sector in Europe. But the paper is very interesting. I urge you to read it.
Thank you, Jean Lemierre. In our debate, there was a key idea that we'll definitely lack in Europe of a real equity culture. Do you think Europe should do more, Hugo Bassi, about this lack of equity culture? And more specifically, do you think the institutional investor will be given new tools to invest in equity? Could Solvency II be changed in that matter?
Well, it's we're turning around basically the same issue from different angles and different perspectives. And it goes again at the heart of the Capital Markets Union project to create an equity culture. Institutional investors are extremely, are of course key players in this. When we look at the asset management part, for example, as I said, and I mentioned it very briefly, but it's important, a very important project to make the passport created through AFMD, making it work concretely in concrete terms and remove barriers. We have now, and this is another very important project, we have just launched a proposal for a new product, a new pension product, the so-called PEP, Personal Pension Product Scheme. I don't even remember, sorry, so many acronyms that
Personal European Pension Plan Product, if I may.
Thank you very much for... And this is.
We wondered what was the characteristics of such a product.
Well, the idea is the idea is to create a voluntary product. To create an European product, which will benefit, of course, of the ability to be sold everywhere in Europe with no further formalities and no further costs when it has the European label, a product which is offered to let's say to investors and which can complement the retirement plans and pension schemes which are provided for a national level. So a completely, I just want to clarify any possible misunderstanding, a completely voluntary product which has no intention whatsoever to compete with national pension schemes, which is tailor-made for the specific needs of aging population, basically. And this is something which, of course, could again offer on the spectrum of available products another interesting, let's say, product, another interesting product which we hope will be used and offered by all the institutional investors, not only insurance companies, but also asset managers and many others. So of course, the elephant in the room of this project is the tax treatment of these possible products. This remains largely in the hands of national authorities. You know that taxation is an area where you need the unanimity in order to achieve results at the European level. Therefore, we accompanied this proposal with a recommendation to member states to give to this new product the same tax treatment that they do, the same possible favorable tax treatment that they offer to national pension schemes. Of course, again, the functioning, the success of this product will largely depend on the goodwillness of the member states in implementing the scheme, but it's a long way through because now it has to be decided and agreed upon by the legislator. But in the end, again, this is another option that we're offering. We can talk about the UVECA-USEF regulation, but I mean, I don't want to monopolize the last 3 minutes. But I mean, as I said, all of our actions, they all aim at achieving this cultural change that you are mentioning.
Stéphane, last comment on the equity culture issue.
Yeah, I don't believe there is any equity culture. There's just equity behavior or rational decisions to buy or not to buy equity. In this respect, what seems to be happening in France for the moment and is extremely important, unlocking the mountains of money that are today locked in real estate and creating the right incentives to make sure that these assets are being driven toward financing the real economy and towards equity, mainly equity, but obviously it will be driven to other asset sources, is absolutely fundamental. Creating the right incentives for people who have poor return, illiquid asset, and creating an incentive for them to invest in liquid, more volatile but higher return assets can have a transformational impact, especially if it is coupled with a reform on capital gains, as it is considered for the time being, with the 30% flat tax, which is eventually creating an incentive where investing in financing the real economy assets is more attractive than just keeping low return and illiquid assets. So I think it can be a fundamental, in particular at the time where the current administration in France is considering a privatization program, because if you want assets that today belong to French taxpayers to belong to French households or retail investors, you need to create those two incentives. So there is a consistency here in what is being proposed, and which can trigger a fundamental change in the approach of equity investments, hence in the equity culture.
Thank you, ladies and gentlemen. Let me thank you on your behalf, our distinguished panelists. Now, Arnaud, let's come to our third roundtable.
Thank you very much. Thank you very much, Philippe MUDRY. Thank you to all the speakers. The subject of the acceleration of the European roadmap is a priority seen by Paris Europlace as well as our partners in Europe. Thank you to Jean Lemierre. Thank you to Yves Perrier, Séverin CABANNES. Thank you to Hugo BASSI, to Stéphane BOUJNAH for your participation. And now I want to welcome my friend Nicolas Barré, Editor-in-Chief Les Echos, and the participants of our third and last session of this morning, dedicated to new opportunities in Europe, in the post-Brexit Europe. And I would like to thank you very warmly, Stuart Gulliver, CEO of HSBC, to participate. And just to indicate that Jimmy Dimon will join in 15 minutes this session. So, guys, if you would like to come to the table.